What's up, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex. We're going to be going over a really nice option strategy for people's small accounts who want to make around $200 every single day in the market. So QQQ, this is going to be a nice option strategy, and especially since we're at basically all-time highs, the market looks like it could be having a little bit of pullback. We don't know how much further it's going to be going, but a lot of people are anticipating that with all the news coming out, that we're due for either market's going to be flat or it's going to be on a little bit of downtrend. So this strategy is going to be good for the tickers SPY or QQQ. And why these two tickers? Well, if we take a look at the options chain, we're going to be having expiration dates for basically every other day, as we can see here. September 22, 24, 27, 28, 9, 20, or 30, October 1st. So we're having a lot of expiration dates basically every other day. This means that we can continuously sell credit spreads every other day and receive a nice credit. So this is going to be a nice strategy right here. So basically what we want to do is, since we're basically selling some credit spreads, we want to do a call credit spread. So we want something with also a high chance of profit. So what we're going to be doing is going to be doing the sell leg first of the call credit spread. Because remember, a call credit spread involves buying and selling a call at the same time at different strikes. So we're going to be selling a call first, and we're going to be doing these 370 strike, which gives us a really nice buffer because currently the stock is at $366 per share, because the pricing of these contracts are not for the after hours. So we want to sell something like a 370 strike, which gives us like a $4 buffer, and then it has a high chance of profit, 83%. And then we're going to do the buy leg, and we're going to be doing the one directly above it, the 371 strike. And as you can see here, we're going to be receiving a credit of $20. So if you want, you could do something like 10 contracts. You're receiving a minimum credit of $200, putting down collateral of $1,000. But you do have a high chance of profit, as we saw earlier, 83% chance. So more often than not, you're going to be winning most of these trades, especially with the market being at this high as it is. It's not likely that we're going to be just ripping up constantly. Eventually the market's going to have to cool down, and a lot of people are anticipating that during this period, especially towards the end of the year, the market tends to cool down a little bit as a lot of people try to reallocate their assets, sell off some positions, especially before tax day. So a really nice strategy here. We're going to be receiving $200 of credit every other day. If you have a bigger account, you could do something like 20 of these contracts, and you're going to be receiving $400 every single day, and that would allow you to give you $200 every single day. So nice strategy here, high chance of profit, as we see here, 83%. And basically you just don't want QQQ or to reach your strike prices. So you want it to stay below $370, and that's going to give you your maximum profit of whatever you have. So it's going to be a max of profit of $200 if you open 10 of these contracts. So really nice strategy. I do this strategy from time to time, but since I have a larger account, I have a lot of collateral that I can put down. I don't really just sell calls or sell puts just outright, and that generally works out for me pretty well. But this is going to be perfect for people's smaller accounts looking for a little bit more return on their capital. As we can see here, this is going to be a 20% return every other day, because we're going to be selling these contracts, these call credit spreads every other day, because we have these expiration dates every other day, which is very nice. And you only can do this with the SPY and QQQ. These are the only two tickers in the market that have these expiration dates, as far as I know, that have it every other day. So 3 times a week you can do that, and that's pretty nice. A lot of people are going to be taking advantage of this and selling some call credit spreads or selling options. You could sell some covered calls if you have 100 shares, sell some cash secured puts. But that's going to require tens of thousands of dollars of collateral. This strategy is only going to be cost you like $1,000 of collateral to open, and you're going to have a really high chance of profit, as we can see here, 83%. And you're receiving a really high rate of return on your capital. As we can see, it's going to be $200 on $1,000, which is 20% every other day. Really nice strategy here, and this strategy can get you pretty rich if you can actually choose some really good strike prices every other day and have a really high win rate. Obviously, we're going to be having those losses every now and then, but more often than not, you're going to be winning, and those winners are going to be outweighing those losses. So that's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on the strategy, and if you have any other video requests, and of course, subscribe to the channel. It helps out a lot. Thanks for watching.